My name is Christian Woodward. I'm with Chainalysis, and I lead our go-to-market organization in the Americas, our public sector and our private sector teams. And tomorrow is my 2-month anniversary with the company. So thank you guys for, there we go, all right. So thank you guys for joining me for this anniversary eve celebration. And the good news is that the content we have is so awesome. And I convinced our presenters today to go 2 full hours. So the great news is that you guys are going to get like an incredible amount of knowledge dropped on you in the next 2 hours. Unfortunately, you're going to miss the happy hour. So I'm only partially kidding. So I'm super thrilled, and a little bit more serious note, I'm really excited to have this session because part of the reason I decided to join Chainalysis is I saw it as an incredible opportunity to help really the world rewrite the rails of the entire global financial system. And I'm pleased that Michelle and Amy and Nicholas are joining me today to talk about what their organizations are doing. So with that said, you guys ready to get into it? Cool, let's do it. So to kick us off and to jump into the deep end of the pool, why don't we talk about your organizations and what you guys are doing relative to crypto? If you need to take that, that's okay. We just...
I'll go first. Hi, I'm Amy Pugh. I'm with Cross River Bank. We are basically a bank that we are a fintech bank. So we like to imagine ourselves the power that enables fintechs to offer financial services and products to the masses, really. So we're empowering the financial inclusion through our partners. We built our business on marketplace lending, moved into payments as a service, banking as a service, and we see crypto as really the next piece of that voyage. And we want to be in the forefront of that arena. So what are we doing in digital asset space? We really believe we're investing in our future. We think the future of banking will be to have that financial inclusion of digital assets. We want to be able to offer it through lending products, payment products, custody, the facilitating buy-sell, all kinds of good things. So that's kind of where we're at, and a little bit of snapshot about Cross River.
Awesome. Thanks, Amy.
Hi. You guys hear me? Like off. Okay. Can you hear me now?
Yeah, we can.
Okay. I'm Michelle Sabins. I'm the Chief AML and Sanctions Officer for Silvergate Bank. We are located in San Diego. We are a financial institution that's focused on serving the fintech ecosystem and have been doing so since 2013. I've been there for 15 years, so for the whole ride, serving this ecosystem, and we are essentially focused on serving, all the banks that, or all the major players in the ecosystem that process fiat settlement payments. And so we serve exchanges and institutional investors, OTCs, and other industry players, and we focus on building proprietary products and services that support the ecosystem. So we have a proprietary settlement network that we have developed that's called the Silvergate Exchange Network. That is a network that allows our customers to settle payments in near real time, 24/7. And that is something that really helps facilitate from a liquidity management perspective, fiat settlement for our clients. But really we're focused on listening to our clients and helping build products that help them grow their businesses and facilitate growth in this ecosystem. So that's really what we do. And so excited to share with you about our journey in this space, and I'll pass it along.
Thank you. My name's Nicholas Joseph. I'm the Global Head of Financial Crime and Compliance and the UK Money Laundering Reporting Officer for FIS WorldPay. Some of you might have heard of WorldPay. We're the largest merchant acquirer in the world. We have been involved in crypto for over 5 years. I've we process for 4 out of the 5 largest crypto merchants in the world. We've recently announced we're going to start settling in USD coins using the stable coin. And we're very positive and pro-crypto.
Awesome. Thank you. So the icebreakers are over. You guys understand who everybody is and what everybody does. The questions are going to get a little bit more challenging as we go on. So the cash equivalent or Bitcoin equivalent for right answers will go up as we move on. So more seriously, I'm going to come at you for the next one, Michelle. So I think what everybody is here to learn more about is the journey, right? So with respect to Silvergate, can you tell us a little bit more about your journey, where you guys started, what approvals did you have to seek, market research that you did, lessons learned and biggest challenges?
Sure, yeah. So we've been in this space since about 2013. And, probably one of the earliest entrants in terms of serving clients in the space. In terms of approvals that we've sought, we have on an ongoing basis and since the early days been very collaborative with our regulators. Our intent is to never surprise them, but to continue to have an ongoing dialogue with them in terms of what we are looking to do. Our efforts have always been around collaboration and to share with them our approach. It's an ongoing education effort with them. So it's not so much of a proactive approval process as much as it is just ongoing dialogue. So we're constantly telling our story is how I'd like to, state that. And the reason for that is just because it helps us ensure that there are no surprises when we get into an examination and that we are taking their feedback into consideration as we move forward in both product development as well as through our examination cycles. So I would say, not so much an approval framework as much as just an ongoing dialogue and open communication with our regulators. In terms of market research, I think, we started in this industry because we had a need. We were looking for an opportunity to find a deposit source that was niche for our organization. And when we started doing research, we really understood this business to be an underserved market where there was venture capital funds that were sitting in institution or in these companies that needed they really needed traditional banking services, and they needed a financial institution to partner with them that could build a compliance program and framework to understand this industry and come alongside and partner with them. And so, it was a place where we could take our intellectual curiosity and build a compliance framework, and then listen to our clients and really take that intellectual curiosity, deploy a compliance framework, and then listen to their needs and build products and services and partner with them from there. So I would say that our market research has really been listening to our clients' needs and building products that complement their business and their business needs from there. And that's what we've done as we've continued to evolve. Throughout the years, we've had to do things like upscale our technology and our technology platforms so that we could continue to scale and meet the needs of our clients. One example of that was we needed to move to a core technology provider that had a better piece of middleware that we could use to build our API on. So we did, a core technology conversion about halfway through our journey that allowed us to build more scalable software solutions to serve our clients. We've continued to staff in a dedicated way to support this industry, and I think doing that and having a strategic focus around this industry has been key for us. It's helped us from a resourcing perspective. It's helped us from a communication perspective with our board and with our regulators. So those are just some of the ways in which I think our focus has really enabled our growth and our success.
Cool. Amy, Nicholas? anything
Yeah,
to
I'll
add?
echo to that. I do think that the journey, it is a journey, and it's a continuing journey, right? It's like a cycle, and bringing your regulators along is so key to that. We've spent really a good better part of the last year working on a roadmap that will get the, as you said, it's not an approval, but you want to make certain you have the buy-in. So I think anyone in that space needs to make certain that they are thinking through, that they're thoughtful, they're methodical, they've got a well-planned, well-structured program, that they're then, again, bringing in the right people. Definitely talking to your regulators is key on a regular basis, keeping them apprised of what you want to do, and making certain they're on board, because they have a lot of questions.
I think for us, it's not about approval. We are a regulated entity in the UK, so we have to comply with AML regulations. And I think when we looked at crypto, and I wasn't here when we first went in 5 years ago, but for me, if you treat crypto as an asset and you're a regulated entity, you have your obligations. So therefore, you have to think about what do you need to do to comply with your regulations, and sometimes explain that to the crypto merchants as well, that you are a regulated entity. You need to know who your customers are. We need you to know who your customers are. So again, it's not approval per se, because it's really just another asset class which you're providing payment processing for. Very different way of looking at it in that perspective.
Got it. Cool. Thank you, Nicholas. So as we look into the future, right, which we've been talking a lot about over the last couple of days, and we think about the next year or two, Amy, I'm coming at you. What do you see as the biggest opportunity for Cross River and other folks in the room?
Right. I truly believe that, and like I said at the beginning, we're investing in our future. We believe that the movement, the momentum that digital assets have, and I guess that you can just see the economy of scale and the growth that any financial institution, regulated entities, getting in this space and getting it early is going to behoove you, right, to be able to grow and expand your business. And that's where we want to be. We have always been in the forefront of new ways to move money, increasing financial inclusion, and what better way than digital assets? If you think about the ability to move money instantaneously, worldwide, at a low cost, in a safe and secure manner. So that's kind of where we see the opportunities and the growth, and that's why we're fully vested in this area. And we do piggyback on our relationships with our fintech partners, and we want to be the ones that facilitate that sort of untangling that offering for them, so they can work with us and they can be able to safely and securely offer these assets in a way that's easy tech build. Fintechs can go out and do what they do best, go out, get the clients, manage that client relationship. We can do what we do best, provide those financial services and products on the back end, and do it in a safe and compliant manner.
Cool.
I kind of look at the future, and it's quite weird. If I was sitting here 2 weeks ago, given what's happened last week, I think I'd be talking about, the expansion of crypto, Bitcoin, and, riding that particular wave. I think what's happened last week, everybody's taken a step back and thinking about what is the future. Mm-hmm. I think the future is the stablecoin, but not stablecoin USDC, but stablecoins or digital assets provided by central banks. I think that's where the future really lies, and how we position ourselves as a company to take that opportunity. How long will it be before the US government announces their digital asset? The Chinese have already launched it. The euro will launch. They'll have to do it, and I kind of think the future is stablecoin, but stablecoins issued by central banks, and that's a big opportunity for everybody, whether it's companies like us doing payment processing or companies like Chainalysis looking at blockchain investigations and working out how bad actors are using these digital assets to launder money.
Yeah, I would echo, so Silvergate obviously has a view relative to stablecoins and has been investing in that infrastructure in terms of technology acquisition. And the president's working group has, made clear that either from a central bank perspective or in a regulated framework within, regulated financial institution is the place where they would prefer to see those types of assets. And so, we have a view as that being an opportunity for financial institutions and have a goal to make that part of our product offering. But I would say in addition to that, I think more and more corporate treasuries will continue to start investing in digital assets. And so for financial institutions who are working with corporates, and we have more of an institutional view in terms of the types of clients we look to bank and the clients that we do bank currently, I think more and more of the types of opportunities in the space will be working with clients who have digital assets as part of their corporate treasury. And so to the extent that they have a need to move in and out or source liquidity and be part of, a network of, customers that want to be part of the digital asset industry and then need those types of services, it's good to be a part of the ecosystem that understands the needs of customers who are moving in and out of digital assets as more and more corporate treasury tries to engage in this ecosystem.
Awesome. Thanks, Michelle. So, Nicholas, coming back to you, now that you've given us the vision for the next couple of years and central bank digital currencies, what are the controls that you guys have had in place and that you're putting in place to remain compliant?
Yeah, I think that's a really good question. I think when we look at it, I look at it from three kind of themes: people, process, and technology. Yeah. The first control, wherever you're doing a compliance program for whatever asset, are the people. You've got to go out and get good people. There's a discussion around, do you go out and find people who understand about crypto and then train them up on financial crime compliance? Just not enough people out there. What we've done is we've gone out and got really smart people, good people who understand financial crime compliance, or we can train them to understand about financial crime compliance, and then we train them about crypto. Yeah. It's not some secret sauce. It really is. It's an asset. It's like any other asset. You can learn about it. So I think that's the first thing. That's our first control, and that's the basic control for any financial crime compliance program. The second control is process. Have a financial crime and compliance program which is fit for purpose, which can manage this risk. And this goes back to, if you treat crypto as an asset or a different product, and I know there's people in this audience who work in big banks, and they're working with different products, different assets. So the first thing you do your risk assessment. Then you work out what your mitigants are. Then you put your processes down. You have structures in place. You have governance in place. And the last one's really around technology. If you think you can just use one of your old AML transaction monitoring tool to do crypto, and use it as a control for crypto, you need to start thinking differently. We've gone out and we've got the tools. We've got Reactor, we've got Cryptos, and that's the final control. So if you link it all together, good people, experienced people, the processes, you understand the risks, you find the mitigants, you put the control framework in place, and then you layer that on technology, getting the right technology tools, the AML transaction monitoring tools, sanction screening tools. You've got your framework there, and I kind of think it's a bundle. It's just not one. You develop it over time. You always try and keep up with the evolution of crypto. It's not something you can just do 1 year and then forget about it. You've got to keep at the forefront. We need technology companies to help us get to where we need to get to in order to have the right controls in place.
I agree with that completely. The people, the process, the technology. I think investing in your teams, educating your teams, we spend a lot of time, and you're right, that gap between banking knowledge and native crypto knowledge is actually really fairly easy to bridge on both sides, right? Neither one of these, there's no secret sauce it's explainable, and I spend a lot of my time explaining things in ways that make it much more understandable to others. But I will say with technology, we use a really great variety of different tools, and Chainalysis is one that we're really happy to have on board.
Hopefully the leading one.
Leading one, of
Yeah,
course, to ensure that we are overseeing and that we are, doing as much automation as possible so we're scalable, right? I mean, obviously there has to be on the back end sometimes people looking at things, but you're hoping to build out a system that will be able to take you into the next generation of asset movement. So you've got to have the right tools, and Chainalysis is one of ours.
I would add something that's really been secret sauce for us and has been really important since the beginning is really specialized due diligence. So in the beginning, when we got into this space, we worked really hard at understanding the customer segments that we were serving and building due diligence programs that were really specific for the types of customers we were working with, and understanding each different segment of this ecosystem and what was unique about the customers that we were serving. And I would say that due diligence, both from an initial and an ongoing perspective, is what continues to allow us to be successful in the space today. So layering the technology and the people and that process with that specialized due diligence, I think, is really the differentiator for us. And that factors into the story that we tell the regulators and what they see when they come to examine us, and the work that we do year over year in continuing to improve that process. But it's also the relationships that we maintain with our customers and the communication that we have with them as we continue to evaluate their programs and evaluate the transactions that we're looking at. And even in the way we use Chainalysis, we're processing fiat transactions. I don't process transactions on the blockchain. That's not the work that we do. But I use Chainalysis in specialized due diligence situations. So I use Chainalysis to go deeper and to do additional deep dive activities in a specialized due diligence way. And so, building out our programs in a way that demonstrates that we are thinking critically about the types of risk that this industry poses to our institution, and demonstrating to our regulators that we've thought carefully about that, and that we're intentional about being in this space in a way that does the controls for the risks in serving this industry as best we can and as conscientiously as we can is really what I think the differentiator is for us, and what allows us to continue to build and move forward.
Can I just add a point? In terms of due diligence, I think it's one of the most important things. We're reliant on our clients and their framework, their financial crime compliance framework, to help mitigate the risks against us. I kind of describe it as a series of nets across the value chain, the transaction chain. And one of the things which we do is, when we have a new merchant coming on board, whether it's a crypto exchange, we test, we do due diligence on their program. And, we ask them questions, and sometimes they say, but why are you asking us this question? Is we need to know our control framework is only as good as their control framework. Right. And if they don't have a control framework, sorry, you're not going to be one of our clients. And I think that's really important. And I think a lot of people, when they think about their control frameworks, they say, we have a great control framework, but your control framework is only as good as your clients. And if your client's chain framework isn't good, it's going to leak into yours.
Yeah, got it.
Yeah, and that's one of the things I think that people forget is that, we in financial institutions and regulated entities, all your obligations still apply. Yeah. So our third-party due diligence and oversight, especially in a program structure such as we have, or like Silvergate or you all, you have to do that third-party due diligence and know your customers, like that face your customers. So you have two layers. So I keep reminding people that you still have all your banking regulations. They're all still there. You have to meet all of them. Plus, you are layering on this whole new world where you've got to really know what's going on in that transaction world too. So we're just thankful for technology that allows us to do that in a scalable way.
Thanks, Amy. So Nicholas, I'm going to stay with you for this one. We're going to pivot just a little bit and talk about the regulatory climate, which is just a hot topic right now. So you're in the UK. Amy, Michelle, and I are in the US. What are you seeing given the difference in regulations between the UK and the US, and what's so different?
Everything. Look, I was reading an article, I think it was on LinkedIn this week or last week, and they were talking about a global regulator for crypto. I can't see it happening. You know, regulators like regulating the companies in their jurisdiction. Just because you've got crypto and it's global doesn't mean the UK is going to defer to what the US is doing, or the Singaporean regulators, MAS, is going to defer. Just doesn't work that way. I think what we're currently seeing are regulators trying to work out how to regulate this, and also at the same time, the pressure for them to not over-regulate it, because that's the criticism. You read in newspapers and it says, if the regulators start regulating crypto, it's going to stifle innovation, it's going to do this, and the regulators are aware of that. And I think what you see in the UK is the regulators trying to work out, how do we regulate something which is so new, growing so fast, changing so quickly? Can we allow it to just be uncontrollable? No. And I think the events last week, I think $1.7 trillion worth of value suddenly disappeared. I think what we're going to be seeing is a real push now to regulate crypto. There will try and be some consensus globally around how we regulate this, but I think each market, and I think about the UK market, I think our regulation will be slightly different from the US market, which would be slightly different from the French market. I think there's an element of politics in it. Who wants to be the kind of, the place which is so crypto friendly? But there'll be risks is it a race to the bottom? Is it the race to over-regulate? And it's trying to find that kind of happy sweet. And I think it's going to take time. Whichever regulator, some regulators are going to get it wrong. Some regulators are going to get it right. Some regulators are going to get it right, but by accident. But it's going to happen. It's going to mature. It's going to mature over the years. And if you look at regulation isn't you get it right straight away. Regulation is evolving. You start off with one place. Sometimes you might go too hard. Sometimes you go too soft. But it evolves as you understand what the risks are. Mm-hmm. You understand where the political pressures are coming from. You understand what the companies lobby for. So it's a real mixture, I would say.
Yeah.
I think that's exactly right. I mean, the regulators are trying to scramble and understand where they need to be taking action, where they don't need to be taking action. And I do think sometimes they get it right, maybe by accident, hopefully by design, and maybe they get it wrong. I mean, I see a lot of similarities to prepaid. I'm probably older than a lot of you all. And when it came out, it was the wild, wild west. It was unregulated. Everybody was like all in crisis. What's going on? And then the regulators really wanted, that time I was at a very conservative bank, very traditional. And, they actually asked us, we want you to launch a prepaid product, which we did. Regulations step in. It's now mainstream banking. I sort of see digital assets going that way. Now, there's always going to be technology that's pushing and trying to say, we're outside of the bubble. But I would argue that there's already regulations. I mean, if you think about it, it's an asset. States have money licenses required for interacting with value. So, we'll see how it goes. But hopefully it's a race to the top to get it right. But I think as a bank, we do see regulation as providing safety for us, because it gives us guardrails, right? So we want to do things safely. We want to be secure. Having precise regulations that give you those protections and you follow them, that is a comfort. So we're hopeful. We've been in discussions. We want to make certain we help craft that thought process, and hopefully we get it right either by accident or design.
Michelle, what do you think?
Since I know what your next questions are, I'm going to save my comments for one of these next questions because it dovetails nicely. Ooh. So I'm going to hold it, yeah.
Can I just add a point? I think, talking about regulation, if you treat it as an asset, you think in the UK, crypto gets regulated, what happens? They have to follow the money laundering regs. Everybody else is doing it already. Yeah. There are so many regulations in place which the regulators, wherever you're talking, US, MAS, or wherever, they can just pick it up and say, this is an asset. We're going to treat it as an asset, and we've got lots of other assets which we regulate, and we're going to apply existing regulation to it, yeah. They're not going to, I don't think they're going to come out with some totally new regulatory framework because they've got the regulation there already. People who are trading in crypto, if you work in a financial institution, you say crypto is regulated, everyone goes, okay. We know what we need to do. We need to know who your customer is. We need to do periodic reviews. We need to do X, Y, and Z. We need to make sure when we're advertising for these assets, we are being fair to our consumers. We're treating our customers fairly. We're explaining the risks to them. This is not new. This is something which they can do.
Got it. Okay. So if we think about the audience for a second, and I imagine that a number of you are representing financial institutions and banks that are just getting into crypto in 2022. What advice do you have for our friends here in the audience? And maybe, Amy, I'll start with you on this one.
I guess, it's like the Boy Scouts saying, be prepared, right? I think that's the best advice anyone can ever give you in any situation. I mean, you really have to understand the rules, the regulations, the compliance around it. You have to have a thorough understanding of the product. Until you understand how it works, then you're not going to be able to predict, as we try to do, read the tea leaves to see where we need to put those controls and mitigants in place. So I think, you're basically doing your research and creating your plan, working your plan, getting everybody on board, and then being ready for curveballs. I mean, we did not see the SEC 121 coming out. Our plan was to custody all of our assets. Now we're, as a bank, because we felt like we were going to do it safely, securely, we would offer that, and we still plan on. But if it is depending upon the treatment, we may need to revisit some of those things. So, you have your plan, but then you have your alternative plans, and you're going to have to keep switching as things happen. But definitely be prepared and be ready to shift and pivot, and then keeping everybody on board. I think one of the things, the regulators, working with them, but inside a bank, and if you all are in banks, you have your board, who all of this is 24/7, it's real time. So sometimes something happens, I have a litany of questions as like how we're not going to let that happen to us coming. And so it's trying to keep on top of all that, getting those communications out there, letting everybody know, your staff, training them. But it's a great ride, and that's what's exciting about being in this space and launching products and taking initiatives and risk. So, but I would just say, be prepared.
I would probably add that we were able to achieve success in this space once we had specific strategic focus. So in the beginning, we were sort of dabbling in this on the side, and it was a hat I was wearing amongst many others, trying to build this program out, and I was doing biz dev on top of running, my other aspects of compliance and operations, and trying to figure out if this was something we could do, on the side. And we really needed dedicated resources and a dedicated program. And, I think once we decided that this was a line of business that we were going to pursue and built staffing and tools and technology and a strategic focus, we were able to be very successful, which obviously took research, and it took, a whole strategic effort. But I think we would not have been as successful had we not made a strategic focus around it. So I think, an institution really needs to have strategic focus, and it needs dedicated resources in order to be successful, because there is a learning curve and there is regulatory communication that's needed, and there is technology investment that's needed. So it's not something that you can just dabble in anymore. I think it needs that level of focus. That said, I think it's, for all the reasons we talked about earlier, worth the investment. I think it's here to stay. So I would just add strategic focus and dedicated resource as something I would absolutely recommend if we're going to get engaged in this space.
So I think there's three things I would do. First of all, I'd get you to think, where in the value chain, the crypto value chain, do you want to play? Like you say, you can't dabble with it. You've got to really think, do you want to get into crypto? If you do, where in the crypto ecosystem do you think you want to have your offering? So think like that. I think also build a framework. Do it before you launch. I've seen too many companies go, we're going into crypto, that's it. You've gone, and financial crime compliance people are saying, hold up, guys. You might want to do it, but we've got to build something to it. Just don't leap into it, Build your framework, think about your financial crime program, think about staffing, A lot of crypto companies around the world are building out their financial crime compliance programs because they know regulation is coming. I've seen some MLROs or BSA officers who've got 5 years experience, 3 years as an analyst, and suddenly they're a BSA officer. Really think about your framework, think about your tools, get your tools, test your tools, make sure you can understand what the risks are and you know how to mitigate against the rules. And then the last thing is launch what you're doing, but do it in a way that you've thought about it, because there's going to be curveballs. And some of those curveballs, you kind of think you've covered all the bases, and you never have. I think the last important thing is really, and I speak as a financial crime and compliance person, it's really the partnership with the business. The business look at crypto and they see profit. They see money, transactions, volumes coming in. And you have to partner, the business have to partner with financial crime and compliance, because we're there to help them manage the risk. Yes, there's lots of money to be made, but there's lots of money to lose if you get it wrong. If you start doing activities which is regulated and you haven't got the license, you're going to get fined. You can get involved in fraud by accident. So you've really got to think about, and you've really got to help the business understand what the risks are. You can't just say, you can't ignore it, but you have to think about it.
Awesome insights, great advice, awesome direction. All right, gang. How about some questions for our esteemed guests here? Yes, ma'am.
I can talk loudly. Thank you for all your comments, and this is really directed to the U.S. bankers. I believe neither of you you're both state-chartered banks, right, and subject to regulation by the FDIC and your state regulator. Recently, the OCC came out with an enforcement action against a recently converted state-chartered trust company, and it was all BSA, and it was a number of pages long. In my opinion, just editorially, I thought it was a very odd decision or odd action, because those are the kinds of things that I thought they would have addressed before the conversion. But putting that aside, when you look at that, even though you're not regulated by the OCC, did you have any particular takeaways from that order that you've sort of put back into your business?
Yeah, I can take that. So I think what we're going to see, and what we're starting to see with actions like that, Carol, are really regulation by enforcement, right? So new charter, new entity, entity that was transacting really before the charter was approved, and entity that, I think was working, to develop programs and examined before, those things were developed. And so in terms of, what types of, so for a shop like ours, we're regulated, examined every year and have been for years and years. I've been doing this for a long time. Nothing in that action that we aren't doing that we felt we needed to enhance our program with. But I think, more so what I took away from that is I think we are starting to see more and more regulation by enforcement. And I think that we are going to see more and more of that because the lack of regulatory clarity in some of the areas in which there haven't been the guidelines that were clear for institutions that had yet to have clear operating guidelines or charters or the right framework to operate in up until that point will be made example of. And I think that may be the case in what happened in this particular scenario. So that was my takeaway, is that there's an example of, regulation by enforcement and just an early case in this particular example.
Yeah, did review it in depth, of course, like everyone. And I do think you're right. It is going to be regulation by enforcement. Again, it just goes back to that being prepared, as we've all said. Have your plan, work your plan, bring your regulators on board, ensure that they're lockstep with you as you take those steps. So hopefully, as you've worked with them, there won't be surprises such as that. But there's always curveballs, so you have to kind of watch and be prepared.
Yes, sir.
What opportunities do you see for your institutions in finance and the regulatory focus on illicit wallets? Do you have a view about the risks associated with illicit wallets and institutions?
I think they're turning the lights off on us.
Time for drinks.
People want to have drinks. Yeah. Obviously, that
Another hour, people.
we said it was good. Get your drinks and come on back. DeFi is a space that we are looking into. There's permission, there's permissionless, there's so many layers, especially with BSA AML components. I'm an attorney, so I'm not the one that's going to go to jail. My BSA AML officer is. So I have to protect them, right? No. But I'm just saying, you think of it, it's a tough one. I think that there's going to be more permission type of DeFi activities, which actually is coming about now, and a lot of them are looking at that. BSA AML OFAC is you have to comply. So if you don't know who your party is on the other side, it makes it very difficult. But I do think there'll be more regulation, more movement in that space as people try to get their arms around it and understand how you can play safely.
Are you as an institution thinking about investing in liquidity pools or partnering with DeFi modules?
We are, and there's just really interesting and exciting things going on in that space. So there's a lot of people that do want to get into permission. I think that, again, it's just figuring out how to do it safely and soundly and bring your regulators on board. I don't know if you guys have been looking at it or... No.
One more? Ooh, it's a toss-up. I think the lady in white had her hand up first. So, sir, after we break, over cocktails downstairs. Okay, cool. Yes, ma'am.
I was just wondering, due to the recent terror, what do you see the trend? And also today, FTSE was announced about the trade talks, right? Because they don't see the retail enthusiasm, or do you see this is a change? Actually learn crypto and then go into
I actually think FTX, what they're doing is getting ready for regulation. You know, if you're a crypto company, crypto merchant, and you know regulation's coming, you've got one or two things. You can either try and build a regulated framework from scratch, or you buy a company. You go and buy a company. I think FTX has bought, the owners bought some of Robinhood. Go and buy one of these companies because, you know, you're cash rich, you can afford it, prices are low. Bring in all the staff who know how to handle it, who know how to speak to the regulators, who know how to do all the registration and the reporting. And you basically jump in the queue in terms of becoming a regulated entity. That's what I think is happening with FTX. I might be wrong, but that's my view of it.
One of the things I was going to say to the question you didn't end up asking, so I'll answer it now. But so it was, we had a question that was, you know, one of the challenges that you faced kind of, you know, that you continue to face. And I was going to say that, you know, since the beginning, when we've been in this space in 2013 and still today, the challenges are the same in the sense that the regulatory framework, since it's still been so ever-changing, you know, one of the things that we are constantly evaluating, both with our customers and also for ourselves in terms of the way we interact with the space, is what the regulatory applicability is for the scenario that we're finding ourselves in terms of the business that we're serving, but also each scenario for each customer that we serve. It's part of the due diligence that we have to consider when we look at each individual customer. And so part of what we do is we look at the licensing plan and strategy for each of our clients during the due diligence process. And to that end, many of our clients have some form of a pivot during the process of our life cycle with their client because they acquire an entity, or they change their business model, or, you know, they expand into some, you know, new territory or line of business. And so we're constantly evaluating how that pivot changes, you know, their scenario, and we serve all around the globe. So what the regulatory framework looks like in the jurisdiction that they're serving or their clients are situated. So sort of this ongoing analysis of the global landscape from a regulatory perspective, you know, has become just an ongoing challenge for us as we've run our business this whole time. And so I think the dynamics as they shift based on the current regulatory circumstances and how that impacts our portfolio and how to think about what to do with our client portfolio when a circumstance occurs that may impact clients in a certain region is something that we always have to think about with our book of business. And so, you know, that's something that I think will be an ongoing situation until we have a more uniform global view of the regulatory regime. But anyways, I'll kind of end on that because I think, you know, the situation that happened in the last week with Terra and what ultimately happens in terms of, you know, the global regulatory landscape obviously has implications for all of us.
Yeah, and I don't want to be the person to hold up everyone from going to happy hour, but I do think taking a deeper look at the specific coins and how they function is imperative for banks. You have to really understand. We had a breakdown of why it really wasn't truly pegged to the dollar, you know, but how do we as a community share this information? Obviously, regulation is going to come, and I think that will help advance stable coins where won't have that issue. But it's a great learning opportunity, and it's just getting to know and understanding how all the different coins work. Thanks.
Thanks. Thank you, Amy. Thanks, Michelle. Thanks, Nicholas. What do you say, guys? Give you guys a round of applause.